to Bitcoin Podcast. The only one that's making your money is you. Listen to the Bitcoin Podcast. So hold on and listen to the Bitcoin Podcast. Hold on and listen to the Bitcoin Podcast. And you listen to the Bitcoin Podcast. And you listen to the
And welcome to another one of the Bitcoin podcast interviews. Today, we are joined by Alberto Cevallos, unleashing the force at ForceDao. Welcome, Alberto. Welcome to the show.
Thank you, sir. Pleasure to be here.
Very nice. So we're gonna get started, man. So let's get the I don't even know how to put the familiarization part out of the way. Like how'd you get into crypto, man, and make this, like, bolster it up, like you can embellish.
All right, this is an interesting story. I don't really know where to start. So I guess it gets into like a personal story, but it's an interesting one, and it's the reason I'm here.
Tell it.
So yeah, so I was doing pretty well as a college student, like in 2016, and I was like in my junior year of college. And I'm originally from Spain. My parents are living in Mexico. I was raised in Mexico for a bit, and I ended up studying in Canada. I was studying economics and math, and everything was well. And then one day my dad called me up and he said, "Hey, we have a problem. We have some issues economically at the house, and we won't be able to support you in Canada." And I was studying at UBC, which is a pretty good school in Canada, and yeah, I had to kind of deal with the situation. And that happened sometime in January of 2017. And at the time, I started developing this love for mathematics and logic and symbols and all this stuff that math still, that I still find interesting in math. And it just happened to be that I understood that math was the basis for physics and chemistry and stats and biology and all that stuff. So I said, okay, well, let's just jump into technology. If I can understand the math, then I can understand the technology, and I could probably become a technologist, starting off with stats, since econ is pretty related to it, and eventually just getting into the coding and whatnot. So long story short, I was kind of bankrupt as a student in 2017, and it just happened to be that the 2017 ICO started booming. So I started getting involved in the space, and I taught a bunch of rich Russian kids how to trade. And that's the way I first started paying my bills in 2017. And at some point, my dad told me, "Look, I have money for you to come back to Mexico, but if you're coming back, you can't get back to Canada." So yeah, I just eventually had this little trading consultancy sort of thing going on. Got into heavy in Python, and then started developing trading bots. And with the trading bots, I eventually got to meet a bunch of other people, and they just started doing economics consultancies in the space. So by economics consulting, I mean crypto economics. So being able to design economies, and I used to write Python simulations to simulate different scenarios of your crypto economy. And this is a really cool tool that's called a Markov chain Monte Carlo simulation. And you can use that to use probabilities to map out what does a good scenario look like, what does a bad scenario look like, and what's the actual scenario looking like. And that helped me. That helped me a lot. It paid my bills. I ended up paying for my whole tuition for the next 2 years, and I paid my brother's tuition as well. And as an international student, that was a lot of money, and that's how I finished school.
Man. It's definitely one of those things. Like, I mean, you didn't get a lot of modeling. I mean, I did a lot of modeling earlier on in terms of similar type things that you were doing just for shits and giggles and trying to understand token distributions of ICOs and whether or not they were meeting the criteria they set out to do. And then also, like, almost like back testing the narrative that people put out when they would make these crypto economic models. Like we're implementing this specific mechanism during the ICO because we'd like to have this thing, right? We want to have a broader distribution, less of a few own everything type situation. And this is why we're doing it. And I tried back test it and see whether it worked. And that garnered a lot of attention from people because people were just kind of half-assed guessing at these things. In a lot of ways, it's a lot of what I found was they weren't doing it, or like they weren't checking to make sure it worked, and people weren't learning from the mistakes. Did you have a similar experience?
I did. I thought it was super interesting because, like you said, a lot of people were just guessing, like, what does the token allocation look like? Okay, it's going to be 10% for the team, 20% for reserves, 70%, et cetera, et cetera. And you had all these pre-sales, and at the time, airdrops weren't really a thing. There was a couple, but they were kind of like a little bit shady at the time. But yeah, like in general, what I think this technology, like just in general, like simulating on Python, different scenarios in the economy, what it helps you do is redefine and just iterate and iterate again and again. Because once you come up with a good economic concept, it's not the final one. Even for ForceDao, we're constantly iterating everything, and I think that's the way it's supposed to be, especially with something that's so experimental like token economics and DeFi.
Yeah, there's
an aspect to that. Before we do that, let's get this out of the way. What is ForceDao, and like what's the whole point of ForceDao? And then we can go into kind of those deeper conversations. And I have a lot of questions already just based on your introduction.
Okay, so ForceDao, it's an end-to-end DeFi investment platform. At the moment, we're kind of focused on yield aggregation for cross-chain assets. So, our motto is currently your portal for cross-chain yield. But we're working on a roadmap. The roadmap is done, but technologically we need to do a lot of more work to get a lot more infrastructure to exist on cross-chain. And we'll talk about the infrastructure I'm referring to. And the idea is that at its core, ForceDao is just a group of smart people who are coming together, who are thinkers, and they're also doers. Many of them are interdisciplinary. We got guys who are doing ETH core research, parity developers, other guys who are in DeFi like me through Badger. And we're just coming together to build infrastructure for the next E-Trade. So I think like the product that we're looking to create over the course of the next couple months is going to be similar to an E-Trade, but for DeFi.
E-Trade on DeFi. E-Trade's deep though. That's a bold statement because I tried to introduce a family member to E-Trade, and that would have been a strong decade ago. And they were like, bro, do I need a fucking MBA to do this? And I was like, no, man, there's a commercial as a baby in a bit. Like if a baby can do it, you could do it. And it was not that easy. So that was great marketing for E-Trade because then when I really started to dig in to help them, I was like, you are correct. I don't even have the time to teach you all this shit. I'm just going to show you what I did. Just buy that stock right there.
Exactly.
But that's a bold statement. You ever done a Monte Carlo in Excel? It's a lot easier.
I probably did it. Yeah.
It's just super easy.
It's super easy, right? Just
you
like
ever
randomizers.
Monte Carlo while eating a Monte Cristo?
No comment.
Not yet.
Okay. So did you only use the money responsibly that you used when you traded, or did you did you splurge on anything? You get PlayStation 4 or anything? What
do you mean?
What's up? I mean, the money that you were making to pay your tuition and your brother's tuition, it wasn't all good. Like you didn't use it all for good reasons.
We've all splurged.
We've all splurged, I think. I mean, I'm not gonna lie. I mean, I did travel a bit because all these companies, these crypto companies were flying you around, and I don't know. I ended up in China. I ended up in Korea at some point. It was amazing. I'd never traveled to Asia before.
Coolest place you traveled?
Korea, I think.
Nice.
I don't know. Actually, no. I think Hong Kong. Hong Kong was pretty insane.
Okay. I've heard Hong Kong is pretty insane. I've heard some stories from friends.
It's impressive.
Yeah,
me. You heard it from me.
Well, dude, of course. Of course. I didn't need to be spelled out. I have two friends here. And they're both right here. No. Aaron will never hear the stories, by the way, Corey. Your secrets.
Pretty sure she's heard them already.
They're here, bro.
From me.
Anyways, what happens in Hong Kong stays in Hong Kong. That's what
Yeah,
they
it
say.
stays in Hong Kong.
Alberto, so like let's get to let's try and let's go deep here.
All right.
Let's go deep. We're not fracking here, we're going straight down.
Okay.
Like, what's the why for ForceDao? Like, what makes this DAO uniquely different than other DAOs? Why did you see there's a need for it? Like, you sat down for a while, you say, you know what I'm going to do? I'm going to build ForceDao. This is why. There's nothing like it, and this is what it's closing this gap.
Yeah, that's a great question. I've been refining that answer over time, but I mean, originally I saw a bunch of problems in the space. I'm not going to bash on any project, but a lot of the yield aggregators that existed, last year or in recent months, because the space evolved so quickly, they had a pretty interesting incentivization problem where their developers weren't getting paid a performance fee, or some of them would go to other DAOs to work because the performance fees are better, or they're just better incentives overall. Some projects had to mint. I think one project had to mint additional tokens in order to pay for their developers. And in general, I think there's a way of organizing an organization of smart people who are building these investment strategies in such a way where they can get rewarded pro rata for their contribution to the project. And that was one of the problems that I saw originally. So just pure incentives. And I also saw that aggregators, so just investment strategy aggregators, they work at its core like a two-sided market. From one side, you got the strategists who are providing investment strategies, and then the other side, you got the buy side, which is investors who want to receive a certain amount of yield or an alpha on their investment. And this is the way the market's behaving. Just purely on observations, this is just how it's behaving. And it seems like some of the aggregators in the space have done this in a hobbyist way, where it's, the world's best talent are doing this investment strategy thing as a hobby. But I did see the opportunity to productize it. And I still think it needs to be productized for the space to evolve. So I wouldn't say it's for selfish reasons. Obviously, there's self-interest. I'm 100% self-interested in this. But I also believe that my self-interest in this, as well as the self-interest of other people coming in, is creating a common benefit. It's kind of like the invisible hand that Adam Smith talks about. So anyways, to just cut it short, I think the opportunity here is to create an organization that incentivizes people the right way to create investment strategies on one side, and then the other side, you have to have a UI and a UX that's perfect for bringing people who are not familiar with DeFi to start earning the incredible yields and alphas that exist in the space. And that's what ForceDao is basically. It's a platform that's building these two things.
The immediate question from me is going to be, how do you define good, right? So you talk about you're clearly intimately involved with crypto economics and this concept of kind of game theory versus mechanism design. Like, how you build the rules dictates what you deem as good and bad. And the goal is to build the rules in such a way where you were natural behavior, whether that be greedy behavior, selfish behavior, altruistic behavior, whatever, trends toward what you consider good. So what are you doing there? Like with ForceDao, that's differentiated in terms of setting, aligning those incentives properly.
Yeah, that's a good question. So for strategies specifically, if you're a person, so let's talk about strategies for a second. So strategies and currently in DeFi, the way they work is based on farming. I don't know if you guys are familiar with the term. Sort of.
Yes.
Okay.
there is a thriving DeFi community in the Bitcoin podcast Slack that never ever stops.
Mm-hmm.
Okay, beautiful. Okay, perfect. So I mean, for the most part, the way the investment strategies work is by you grabbing an asset and then you deposit the asset into an incentivized market, and quote unquote incentivized. So that market could be a lending protocol, or it could be an automated market maker, like an exchange, like Sushi, DEXs. And once you deposit that asset into the incentivized market, that incentivization is actually just rewards for having used it. So if you provide liquidity in Sushi, Sushi will give you Sushi rewards for having used it. if you provide if you provide lending, okay, if you start lending assets on Compound will incentivize you by giving you Compound tokens. So the strategy is very simple at its baseline. What you do is you deposit the asset, you liquidate the rewards that you're earning in exchange for the asset that you deposited originally. And that way you're auto compounding and increasing your position over time. And that's a very simple investment strategy. And that's, I think, the one that most aggregators or DeFi strategists are using. There's more complex ways of doing that. You know, you can have, instead of using one protocol, you can use like 3 protocols to do the same thing. But yeah, the incentives are what's being used to grow your position and to earn money. Do I think that's going to last forever? I don't think so, but we can talk about that separately.
So say I want to be on that one side that you talked about. I want to be an investment strategist. What would be like my step one for getting involved with ForceDao? Like what walk me through my story? It's like, hey, I got some investment strategies, right? I wanna strategize forcefully. So
exactly.
Forcefully.
I want to forcefully strategize.
You want to enforce some strategies? Okay.
Yeah. So, you know, how do I engage?
Okay, so I guess we just talked about the buy side, so the supply side. So going back to the whole incentive thing, what does the strategy mean? Okay, strategy means it's a method or a couple processes they use to earn an alpha or to make more money. In simple terms, you know, currently what we just talked about is called the yield automation. When you grab the yield that comes from these rewards and you liquidate them and everything. But there's actually a whole list of strategies that you can do in DeFi. So you could do, so one strategy could be yield automation, another one could be indices, another one could be arbitrage, like those spots that I was telling you guys about. Another one could be NFTs, and what else? You can have derivatives as well, like options, futures. So the infrastructure doesn't exist, but what we want to start with is here's some yield automation basics. If you can put some pieces together, let's say Frigolati. I don't have your first name, but Frigolati. Okay, so if Frigolati knows,
you call me D, man.
All right, I'll call you D. So if D finds an alpha that he's doing in a manual way, speak to the team, make a proposal on the forum, and let's productize it. So I'll join you personally and with some other devs, and we'll work literally on incubating the idea. We design the process, we build it out, we test it, and then we deploy it. And everything we're doing is going to be tested by an auditor before we put it out. If it's not tested by an auditor, we're going to have it as an experimental strategy, meaning that it's capped at the amount of deposits it could receive. So that's the first way you could do it. We're working on setting up a bunch of permissionless AWS infrastructure, meaning that if anybody can come in, you have a certain amount of time that you can use the EC2 buckets for, and you can set up a Python script that's just trading and arbitraging on different chains or on one chain, and that's easier, you know, because that's more similar to what Kaggle looks like. You know, you get financial data, you get a notebook, you develop a simple strategy, you deploy it, and off it goes. We can get into specifics about how that works, but yeah, generally speaking, this is all driven by personal self-interest.
It's kind of like a Numerai approach.
Yeah, that's right. Numerai for DeFi. That's kind of the vibe.
Wait, Numerai is not considered DeFi anymore? Didn't they consider themselves DeFi back in 2017? DeFi didn't even exist in 2017. That's right.
DeFi didn't exist back then.
DeFi didn't even exist in 2017. So they're like, "Fuck, we were too quick. We were too quick on it."
Too quick.
Numerai is doing pretty well from what I last read. I didn't keep up with that project, but I know it's really, really good from what I hear. But I'm gonna throw it to Jess.
Yeah. What's the token for?
Or Corey. I'm gonna throw it to Corey.
Sorry. I'm just shooting off the hips.
You keep asking your questions. I'm just listening.
Okay, so the token is a signaling mechanism for governance, number one, but it also has an additional property that it receives the performance of all the fees or all the profits generated by the strategies. It's called profit sharing, a specific mechanism.
So if I hold the token, I get a slice of the profits. The more tokens I hold, the more profits I get, and the bigger my slice.
Yeah. That's in short.
There was an There was an What was that about?
So
It's more
Yeah.
complicated than that.
it's. I mean, like it's basically that. It's basically that.
All right, let's take off one layer of complication. Let's go a little bit deeper.
Okay.
Maybe we could use nice round numbers. I got 100 tokens. How big is my slice?
If you have 100 tokens and you do nothing with it, nothing will happen. But if you grab the tokens, if you grab the tokens and you stake it inside of a profit sharing pool specific for Force, then you will start earning more Force. And the way those new Force are generated is by grabbing the revenue, a portion of the revenue that we make as a platform, and using that cash to buy back the token at the spot price, and then we give it back to you. Pro rata.
Yeah. All right, so I gotta put my tokens back in the machine, then I get my slice of the pie.
Yeah, you got a slice of the pie, but if you want to get your slice of the pie to work, you have to put it into the machine.
How did you manage all this, right? Like, how do you manage the community to participate? And a lot of previous DAOs and decentralized organizations, maybe not DAOs, but just like more flat organizations that are trying to get people to vote on things. Participation sucks. So like not only is it like getting a percentage of the vote is hard, but also informing people that there is a vote in the process of voting. It's all hard. So what are you doing there? How are people interacting with this and doing these things? How many platforms do they have to use in the process of trying to vote and stake and do things?
Yeah, that's a really good question, too, because governance is an issue that DeFi has at the moment. There's no clear answer for any of the questions you asked. I don't really know how to answer this question entirely, but these tokens are serving as signaling mechanisms more than they are for governing. It's really hard to do on-chain governance. The closest thing we had to it was Aragon, which started pretty early, like in 2017 as well. Yeah, I mean, I guess the way current people use governance in DeFi is through this app called Snapshot. And then Snapshot is this off-chain solution where you can use your tokens in your wallet to signal your support for proposals to either accept them or reject them. And so once a Snapshot vote has taken place, it may start at some period, it might end at some other period. And throughout the transcourse of the whole thing, people can vote on whether they accept it or reject it. If it's accepted, it doesn't necessarily mean that it's going to get implemented, because the people who have access to the on-chain contracts, let's say like a strategy or a controller or some like admin contract, at the end of the day, they're just developers. They're developers, so you still have to trust them. So it's really hard to do on-chain governance. I hope that I was reading that Aragon has something that they're going to put out in Optimism, which could solve that. I forgot the name of it. But I think in general, it's just really hard to do governance on chain.
I appreciated something in your response there, Alberto. I just was thinking in my head. I probably should have just been listening stronger, but you said something that like just made me sit back and appreciate the maturity of the space. And I was thinking, I was like, if crypto had epochs, right? Pointing to these last epochs is getting this with this most recent one that we're in right now. It's going to be really hard to point back to it and find the singular thing to tie it to. Like, for example, everyone thinks 2017, they think ICO craze, right? Then you turn back the clock more than that, everybody thinks Mt. Gox, right? Like there's these singular events that cause these epochs, these ripples through the whole community, through the whole space. But like when people look back at 2020, 2021, what are they going to say? Oh, it was the NFT craze. Oh, it was the DeFi craze. Oh, it was the institutional investment craze. Oh, it was like nothing can be tied back, which kind of like makes me really confident in the maturity of this space. And it also just points out like, oh, we are reaching that thing, Corey, that was at the beginning of our show for years, which was mass adoption. Like we're getting there, because if you look back, like 4 years from now, there's not going to be 2021 was the NFT craze. No, there's too many things to point to say what the craze was. So I don't know. I just thought that was interesting. There's no question there. I just appreciate the response.
Piggybacking on that, like it's got to the point now where at least it seems like you could be successful and not have like global impact on the crypto ecosystem. You can be wildly successful and still not like be heard of because the space is so big.
Yeah, we will see billionaires this year for sure. The first crypto billionaires, or first DeFi billionaires. I'm sorry.
Oh yeah, and
we will see that this year.
I think what's going to be cool, Alberto, is it might be a DAO. It might not be a person. It might be. Well, there's already DAOs that are
it'll more than likely be like I think overwhelmingly likely that it will be a DAO of some sort that basically automates the process of managing all these weird DeFi things. And you mentioned earlier when you first started, you specifically said it a few times, cross-chain. Is that a differentiator in these things? Or most of the current aggregators, yield aggregators, only focusing on a specific chain? And what's required to do it across a bunch of different chains? How does that complicate things?
Yeah, that's a good question, Mr. Good Questions. So
we've been doing this for a while.
Corey, Mr. Good Questions Petty. Look at him.
Okay, so yeah, I mean, yeah, the aggregator space is interesting because it looks like everybody has its own niche at the moment. You know, you can make the argument that Badger represents Bitcoin DeFi and Bitcoin strategies. You could also say that Wi-Fi has OG strategies and OG strategists. Like they're like the first people who really started this. Yeah, I don't know. Harvest Finance it's more on the experimental side, but people love it. I like it personally. And there's some newer ones like Vesper Finance, which it's incredible. I think they launched a couple months ago, but it grew amazingly. Like from, I don't know how, I think when I first saw it, it had like $100 or $40 million. Something low compared to what it is right now. I think right now it's closer to 700 million or even $1 billion. I haven't been keeping up with anything. Yeah, and everybody has their niches, but again, I like the way you would differentiate yourself, I think, is to the community. And here's an interesting thought. And there's something that Andreessen Horowitz said a long time ago, which was do the things that other people can't do. And in crypto and in DeFi specifically, in a world where anybody can fork anyone, the community is the only thing they can't take away from you. So if you have a strong community, I think you will have the support of the network effect that comes behind it. The investors, the influencers, the thought leaders who are talking about you. And it all starts with community. So I think the community is the most important thing when building an aggregator. And I would also say that, you know, having a niche is important in the beginning. I mean, you can't expand and become a massive conglomerate or have a bunch of verticals unless you start with something very simple.
Corey, did you hear it? Oh, okay.
We're all about community. That's kind of that's been my focus in this ecosystem since day one, basically. And I agree that the community is what makes or breaks you. How you get it, how you hold it, especially when it comes down to people who are joining because they want to make money or manage money is probably a complicated thing.
Yeah, I mean, it doesn't have to be so complicated, and Numerai is a perfect example of that, because they were able to align everybody's incentives for the best benefit of the hedge fund, which is what they market themselves to be. But the other thing to think about with all these aggregators is investors aren't investors aren't loyal to a project; they're loyal to their money. So if you offer high APYs, then people will just flock to you. And the day that you don't have a higher APY than your competitor, everybody's going to flock to the other place. So yes, community is important, but when it comes to TVL and you know, these params that are driving the growth of your company as an aggregator, or the growth of your project as an aggregator, having the best strategists or having the best thinkers when it comes to this space is super important. So they need to be super incentivized.
How I just want to know how cool do you feel that like all that math, all that theoretical math that you studied, all those symbols, and now you just get to play with them and turn them into actual real value.
It's crazy.
Is it? I know it feels
crazy,
good,
man.
because I think about the shit all the time. But I got a GPP job, but I'm just like, oh my god, divide that by that.
Oh yeah, I gotta multiply this thing.
Some Sigma notation. Throw it in there. That's right. Throw it in there.
Exactly.
I hope you sound that creepy when you're making these algorithms too. Like, oh,
yeah, I just moan a little bit more.
Ooh, pi notation. What's the integers? What are we rocking with? No,
yeah, I mean, you took that.
That's so creepy. That's so creepy to do math in that voice. It is.
I hope that you only do math from here on out like that, dude. Yeah. Is that what you sound like, Jesse, when you're studying?
Yeah, absolutely. Talking about biological systems and like
that's
lactate.
Yeah.
You have your belly button and you do it.
Whoa. I don't.
That's
I don't
the creepiest.
Know about
that's the creepiest thing you can do. That's the creepiest thing that you can do in any given scenario is to rub your belly button while you're doing it. I can't think of. I mean, I can think of creepier things, but that's like one of like the harmless ones that are really creepy.
I like that you've actually put it on a scale in your head. Like I like that you were like on a scale of not that creepy to most creepy.
Yeah, he operationalized.
Well, yeah, you gotta like.
You gotta operationalize.
Yeah. I don't even know what my question is now. We've gone so far off the rails.
You are welcome.
That was
good. So why an airdrop model? Why that?
Yeah.
There's other models, but you chose that one. Why?
So, I mean, our whole team chose it really, but you know, when we were okay, so the airdrop seems to work pretty well. I'm gonna be honest with you. Like I've seen it work pretty well in other projects. I was part of Badger very early on, and it worked well for Badger. But I think there's a lot of people hate airdrops. Like if you go to the Discord channels for ForceDao, some people hate it, some people love it. The reason we're doing an airdrop is because it's our opportunity to attract people who have a similar ethos and vision that are working on other projects or investing in other projects, and tell them, hey, we represent this. We're like-minded. Mm-hmm. Come over. I mean, obviously we're not going to catch all the edge cases, but we assume that hopefully we will.
By the way, a little pro tip for the youngsters in the audience: if something is both hated and loved, do it because it's a fucking sweet spot. It is a sweet spot.
I mean,
like Macs, man. Some people hate them, some people love them, but Apple's doing all right. Apple's doing okay.
There's no. I could wax poetic all day on the consequences and reasons for doing an airdrop and what that means in terms of token distribution and equality and inclusion and things like that. But at the end of the day, it's a bootstrapping mechanism. That's all it is. It gets tokens in the hands of people who may or may not want to be using your product. It bootstraps people using your product. If they hate it, they're going to sell it. If they love it, they're going to have a reason to come over. It's that simple. And if those who don't care, that money's now locked up. It's basically, well, depending on whatever rules you have for reclaiming things, that's just money that's gone that effectively raises the value of everything left. There's a lot of
that's right.
easy things to comprehend with an airdrop. And with blockchain technology, it's simple. It's just a simple way of doing distribution that can't be done as easily anywhere else.
Mm-hmm. Yeah, I agree.
So that's why you see them so much. Unfortunately, it's expensive. It's expensive to claim. Have you thought about? This is the main thing that I worry about. What metrics do you come up with for discerning who gets an airdrop and what goes behind like these metrics? Like who do you want to incentivize, and then how do you come up with metrics to get it to those people, or you just like throw a broad net and see what happens?
You know what, man? I'm gonna be honest with you. I hate all these those airdrops, and there's So some of these airdrops are like, if you do that a little bit, it's good because you hit it right in the nail. But the very recent airdrops, the ones that we've seen from January till now, it's kind of like you have to do a triple backflip and jump twice in the air, and I don't know, you got to do some crazy stuff in order to participate in that token. I'm not a fan of that because the whole point of the airdrop is, number one, you want to have an airdrop that's massive. You don't want like a 2% or 1% airdrop where later the VCs are going to dump on you, or later, some team rewards going to click open and then out of nowhere the market cap's going to dump. So you want to have a massive distribution so you can get to as most people as possible. So my idea is, like, I would hate for a project like Force that has this potential at the moment to be this, like, to have one of these consequences which you see in these big coins, like the ones in the top 100, that sometimes like the team allocation opens up after 12 months and then you see a massive drop in price, a massive drop in market cap, because people don't care, I think it's a better idea to have a massive distribution since day one, get the token in as many hands as possible. If you want to buy it, awesome. There's people who are going to buy it who see the value in the project. The people you don't want to buy, you just want to dump it, that's fine as well. But you do have a pretty good cushion and resistance level since day one, rather than having liquidity that's built up slowly and it's very delicate. You can have a strong coin since day one, and then everything else I think is driven by fundamentals.
I like it. I like the cut of your jib, Alberto. I really do.
I had a strong opinion right there.
I like the cut of your jib. I'm put on my Negrodamus hat for a second. I'm gonna make a prediction. So I predict that very soon. So everybody thinks companies got that money. No, families got that money. Trusts, endowments, people that just been sitting on that railroad money for a long time. Just so much money they don't even know where it is. Just money buried out in the yard and shit. Just this isn't going off the rails. This isn't going off the rails, Alicia. I don't appreciate that.
Dude, this is hilarious.
This is a actual prediction.
Endowments and money.
Yeah, I think some of that the big pile of money is gonna head to DeFi. If it hits Force, are you guys capable of both sustaining that attraction of endowment money, hedge funds, trust funds, that kind of stuff? Like, do you feel like you're in a position to catch that much volume?
Great question again. So, okay, so for DeFi to be that level, that mature, like you're speaking of, like where a whole endowment, like a college endowment would go to deposit 10% of their money into this, a lot of things have to happen. I think currently some of the funds that I've seen, they're kind of like trust funds or what's called family offices. You can allocate like 1 to 5% of their money into DeFi because it's super risky. So number one is risk. How do you control risk? So I'm telling you, man, like with Force, we have to behave as if this was a hardware product that we're shipping. The hardware cycles have to last 6 months or 3 months at least. 6 months, 3 months to a year, I would say, for every single product release that we would have, like for a new product that we're offering. For example, this yield automation stuff that we're doing, it's already been battle tested. A lot of the code that we used was based on Harvest Finance. And we actually, just for anybody who's listening to this, we're actually giving a big portion of our airdrop to Harvest Finance. So thank you for having developed the tech. And I think that's the right thing to do. But anyways, so Harvest Finance had that code. We're currently doing a code review at the moment with one company. We're starting a new code review with a second company, which is a proper audit. And it's a very big security firm, so we'll be announcing that later. But I think the most important thing is security. If I'm a hedge fund manager or I'm a family office manager, a principal there, and I think that my funds will get exploited at some point, I will never invest in that. So the first one has to be trust, and I think that all companies in DeFi have to be developing with these hardware development cycles. This whole idea of design, iterate, prototype, put it out, it's very, like when you're dealing with money, it's very risky. You're not managing information flow. You're not managing pictures on S3. You're not managing some like data on your DynamoDB. You're managing people's money, so it's pretty serious.
Hey, if I lose that $69 million NFT,
Exactly.
I'll be mad.
Dude.
Or if it's hacked because of a faulty smart contract
Yeah, exactly.
or a rug pull.
Serious. Yeah.
Well,
So I don't know. I think we can contain it, but we have to. I'm working on setting up these security practices right now.
okay, I think you hit the nail on the head when you said risk, and it's awesome that crypto's at a point where I hear that word uttered in crypto so much, a lot, because that means people are actually thinking about it. Yeah, you're putting it out there, Corey. You're doing a good job, bro. You know, how can you assess risk if we don't talk about it? That's what you're doing, Corey. You're talking about it. You're like, look, guys, let's talk about risk. You know, and everybody's doing it. So good job on that. I don't know if I have any more questions for you, man. I think you know what you're doing. I hope when you're doing all this math, it sounds creepy, like we iterated, like we showed here. Not iterated, but like, you know, at least I know it did for me one day. But Jesse, you got anything?
No, surprisingly, I'm pretty good on this one.
You got nothing? No questions?
I mean, no, not really.
Not even that one question?
That question. All right, you ready, Alberto?
All right, shoot.
So my signature question that I ask everybody who comes on for an interview is what you do actually hard?
I think for me it's hard sometimes.
And then what in particular, if you had to talk to what is hard, what would it be and why?
So a lot of the work that I'm doing lately is working on strategies. So thinking about every single attack vector is really hard. There's attack vectors you can't imagine. And then also designing your smart contracts is really hard sometimes, because I think upgradability is a bit of a flaw in the space, and we can talk about that too. But how do you design things in a way where you can deploy it once and then don't even have to worry about it, assuming it's audited? And again, audits don't always ensure security, but you like to think that it happens. And then how do you design strategies in a way where you're doing things efficiently and securely? So I think that's the hard part of my job lately.
Nice. Such a good question, Jesse. I'm telling you, it's a power.
I love
move.
that question.
It's a power play.
Powerful. That's a fucking power move.
Yeah, it is. I would ask this last question in 10 words or less. Can you describe DeFi?
Permissionless, censorship resistant, peer-to-peer finance that can't be stopped. That was
That's
7,
good.
probably.
That's close. It's 7 if we just throw some hyphens in there. I got 8. I got 8 or 9.
10 words or less. It's fine. You did
That's
it.
fine. Yeah, I guess. Yeah.
Nailed it.
If you hadn't nailed it, then this episode wouldn't have aired. So you put it all in line there.
That's like
I knew it, man.
4/5 of all of our interviews would not be aired if that was the case.
We just have this library of shit that we can't put out. It's like a shame they can't answer that question. Alberto, thank you very much for swinging by, man. I know we could talk for. I mean, this is crypto. We could probably talk for hours, but
we could.
We don't want to.
You attracted some core community contributors from the Bitcoin podcast community over to what you're doing. So
you're excellent people. Yeah.
All right.
You're excellent, and thank you guys. Yeah, appreciate it.
Are you working in a job that sucks balls? Does your job suck and ergo your life? Do you want to change that because your life is sucking? Join the TBP Slack. Get a better job.